Hello friends, let's start with business and financial market update. The stock of one iron and steel company has doubled in 3 months. Shares of Jindal Stainless Steel hit a new high of Rs 263 as they rallied 7% on the BSE on Friday's intraday trade amid heavy volumes on strong business outlook. The stock of iron and steel company surpassed its previous high of Rs 255 touched on January 2, 2023. In comparison, the S&P BSE Sensex was up 0.4% at 60,881. In the past 3 months, the stock price of Jindal Stainless has doubled or zoomed 99% as compared to 2.9% rise in the S&P BSE Sensex. In past 1 month, it rallied 23% as against 1.3% decline in the benchmark index. Meanwhile, the group company Jindal Stainless hit a new high of Rs 471.9, gaining 3% on the BSE in the intraday trade. The stock has rallied 84% in the past 3 months. Both the companies are scheduled to announce results on Monday 23 January. Analyst ICICI Securities said Jindal Stainless expects volume CAGR of 20% by financial year 25. Expect EBITDA financial year 23 margin to sustain at Rs 18,000 to 20,000. Majority of committed capex has already incurred and domestic demand is likely to remain robust, led by new applications, particularly from railways. Moving on, shares of PVR dipped 5% to hit over 10-month low of Rs 1,594 on BSE in Friday intraday trade, despite the multiplex operator reporting a strong recovery quarter-on-quarter, led by improved content performance in the December quarter. The stock was trading at its lowest level since March 8, 2022. Meanwhile, shares of Inox Leisure were down 4.4% to Rs 473 on the BSE in intraday trade. In comparison, S&P BSE Sensex was down 0.27%. In the past week, both these stocks have underperformed the market by falling 8% after the NCLT Mumbai bench on January 12 allowed the proposed scheme of amalgamation between PVR Limited and Inox Leisure. In comparison, Sensex was up nearly 1% during this week. Moving on, shares of Coforge rallied 7% to Rs 4,250 in Friday trade. In an otherwise subdued market after the information technology services provider reported better than expected 24% year-on-year jump in consolidated profit after tax to 228 crore rupees in the December quarter. On consolidated basis, quarter 3 financial year 23 revenues were up 3.7% quarter-on-quarter, whereas 20.7% year-on-year on a constant currency basis. In rupees terms, meanwhile, revenue was up 4.9%, while 2% Q-on-Q in the dollar term. Moving on, Indian tycoon Gautam Adani, who added $40 billion to his wealth last year after a blistering stock rally, wants validation from the investing public and critics who questions the forces pushing up his company's share prices. To woo mom-and-pop investors to buy into his ports and power empires flagship Adani Enterprises Limited will sell new shares at a discount and allow payment in 3 installments when it rolls out its $2.5 billion follow-up offer later this month. An unprecedented move for one of the country's hottest stock that has rallied over 1,400% since early 2020. Sweeteners are crucial to woo retail investors. Moving on, global rating agency Moody's has upgraded the long-term local and foreign currency deposit ratings of Bank of Baroda, Canara Bank and Punjab National Bank from BA1 to BAA3, reflecting improving credit profile and macroeconomic conditions. It also upgraded the baseline credit assessment of the State Bank of India and 3 public sector banks, BOB, Canara Bank and PNB. The upgrading of ratings and BCA reflect an improvement in India's macro profile to moderate plus from moderate and improving credit metrics of the 4 banks, Moody said in a statement on Friday. In addition, retail loans have performed well despite pandemic-induced economic stresses, indicating better underwriting quality and relatively low household leverage in India compared to those in many other Asian countries. Moving on, HDFC plans to raise at least 3,000 crore rupees through bonds maturing in 10 years, Reuters reported, citing 3 merchant bankers. The housing financer is likely to invite the coupon bids from investors and bankers next week. The bankers added, the issue will also have a green shoe option to retain an additional 2,000 crore rupees. Moving on, Infosys is preparing to accelerate its pace of acquisition, taking advantage of more sensible valuation and return of IT spending when economics stabilized, CEO Salil Parekh and told Bloomberg. Parekh said he has been meeting clients in Davos and many expressed optimism about the year ahead. It's not all of them, but certainly the vast majority, he added. Moving on, Orius Venture Partners, which holds 17.14% stake in Gomechanic and is its second largest institutional stakeholder, said it has written down its investment in the startup. While the value was not mentioned, it could reportedly erode about 60% of Orius' investment value. The development comes after Gomechanic co-founder Amit Bhasin admitted to financial reporting error while firing 70% of staff. Thanks for watching this video. Stay tuned with Financial Pulse for business and financial market update.